talking about it, I am still in favor of owning the tech titans. But I understand that if the Fed starts talking about it has to cut, the tech titans, they don't benefit. And today may be a counter rally. I don't know if it's the real rally or not.
Yeah, look, very hard to figure out when this rotation will kind of end, when the pressures will ease. But we do have a Fed meeting today on the topic of rate cuts. Powell expected to signal not this meeting, but the following.
Yes.
Maybe we'll see some a 25 basis point rate cut. But at least for today, we're seeing a big relief rally within tech off the notion that the AI revenues are still strong. The big mega cap tech stocks or companies are still spending on AI. So this notion that a slowdown or not seeing the revenue contribution seems to be fading away, at least for today.
You know what? I was talking to my writing partner friend, Matt Horween, who was speculating when you see the ADP data is weaker. We may actually be at that moment in the cycle where you're beginning to not get the hiring of white collar because we've discovered that you can use AI to replace employees, whether it be in the call center, contact center, or I'll tell you where we're really soon to see it. In early level professionals who tend to be more by rote and proofread, those people will not be hired as aggressively. And that may be reflected in what could be a slowdown in the hiring of the high end.
Yeah, perhaps. I mean, we know that if you use Microsoft M365 Copilot, you can be more efficient as well. They were saying last night, Microsoft on their earnings call, the number of people using Copilot nearly doubled quarter over quarter. A lot of big companies that do a lot of the big hiring, they're all adopting it. And then the quarter at large, it was a small beat. Azure revenue a little bit lighter than expectations.
Some Euro weakness.
Some European
very
weakness.
Odd, by the way, because Europe's quite strong, except for Germany.
AI services contributing 8 percentage points of growth. And then CapEx, they're still going to spend up. It was up $5 billion quarter over quarter, 78% year over year. And the reason why is because they're following demand.
Right.
And
they need compute power.
Exactly. They need that capacity to meet the demand of their customers.
Yeah, no, I think something's going on here regarding valuation. For instance, if you go over the conference call for Alphabet, everything was good except for one little bit of YouTube. If you go over the Microsoft, everything's good except for one little bit of Azure. It's almost as if the hedge funds who do this active trading, remember they sold Microsoft down 30, they're looking at finding something that's a chink, because they see these stocks going up and they really want to have a reason to sell them.
Yeah.
Beyond that Microsoft's selling at 36 times earnings. Now, obviously, the two fulcrum stocks right here are NVIDIA, which does not report this week, but maybe selling as little as 23 times earnings, if I'm right about my numbers. And then Apple later this week. And I got to tell you, I very much care about Microsoft, but Apple is obviously one of our foremost positions for our charitable trust, as is NVIDIA. These are own it, don't sell it. And I heard something from Mike Sievert today from T-Mobile, who had an excellent quarter, talking about even though he had an excellent quarter, he has to defend his share. Now, if you have to defend your share against Verizon and against ATT, you need to be buying new Apple phones. So we may actually have a little bit of an insight ahead of time from what Sievert said about Apple being a top-of-mind company for people who want to take share.
Well, I'm a big believer as well that there's going to be a nice upgrade cycle, especially from these AI features.
That was one of the things, yes.
Yeah, absolutely. But maybe back to the Microsoft. So we did upgrade our rating to a 1.
Yes, that was very good.
I mean, stock's down from 480, to 420 today. It looked a lot worse at one point last night.
Well,
they did guide Azure revenue in the second half of the fiscal year accelerating. So that's certainly something to be mindful of, because that's a key driver of the stock.
Right, and if you go to another stock that we own, AMD, you heard Lisa Su today talk about how there is a shortage of compute power. Now, what does that mean? It means that the customers want more. They want literally more business. They want AMD to be able to do more business with them, but AMD doesn't have the bandwidth. Why does that? Because they don't have enough high-end M300, M350, MI300, MI400 that they're going to make next year, which is against Blackwell from NVIDIA, which Lisa Su told me, look, there's so much business for everybody. Do not worry about NVIDIA. And she is a real competitor of NVIDIA.
No, absolutely. And they did raise their guidance for the full year to $4.5 billion from $4 billion, like we talked about on the monthly call last time. It does sound like they are a little bit supply constrained. This is the fastest ramping product in company history. But as you mentioned, they are building a nice order book of customers. Microsoft is an existing customer. So when you see Microsoft's CapEx figures last night and their guidance of fiscal 25, an increase versus 24, that bodes well for AMD and also Broadcom and NVIDIA.
Right, but I think we got to go back to the idea that don't remember this big theme is you should be in the mid to small cap. Let's say not as big as companies, not as big. I mean, DuPont's 35 billion. That comes to something not as big. Mm-hmm. And the reason why you want to do that is because when the Fed cuts, they are the ones that most get influenced. So remember, as much as I like AMD, and it should be much, much higher because they got it up by $500 million, people are still saying, you know what, I'd rather be in a company that is going to benefit from lower rates, and AMD won't, because AMD is frankly a pure growth stock.
Yeah, solid relief rally today. Let's turn to Starbucks. The results not as bad as feared, kind of like McDonald's, which we previewed into earnings last night. Small revenue miss, earnings per share in line, but we did see some slight improvement in North America. Though China was much worse than expected, but I think we all knew that. They are rolling out the Siren Craft system in all U.S. operated stores. Saw some improvement in the rewards program, reaffirmed guidance, constructive talks with Elliott Management.
Yes, and I've confirmed that it is constructive. Now let's go over this notion of how their business works. There's two components to Starbucks business. There are the people who have the rewards, of which, by the way, the rewards, as you know, is very active in giving people really good discounts. Yep. And so the transactions are up big. And then there's what's known as the top of the funnel, which is people who are occasional samplers who decide to become rewards members. There's no doubt about it that Luxman is helping the bottom of the funnel. The top of the funnel is uniquely being hurt by a mischaracterization of the company as being a Jewish company by protesters who make it so it's intimidating to go into the stores. And this is not just in America, it's worldwide. So either as, you know, I don't want to make I don't want to make a judgment on what people are doing or not doing in terms of crossing a picket line or being made fun of if they go to a Starbucks. But that's hurting the top of the funnel. It's a mischaracterization is what they call it.
Very quickly, though, you were very critical last time, rightfully so. Seeing signs of improvement, or do they still need Elliott to come in?
He's a good COO. I want a good CEO.
All right, let's move to DuPont. They reported this morning, clean sweep of beats, net sales, operating EBITDA, adjusted EPS, 12 cents higher than expected.
This could go higher.
Electronics business is recovering rapidly. Consumer electronic wins, AI driving sales, water improving sequentially, safety down high single digits, but shelter up low single digits. Q3 guide better than expected, raises the full year meaningfully. Surprised the stock's not up more.
Splitting into three will be. They're splitting into three companies. I believe that the water company will be purchased for a much bigger price than it's currently selling. A $35 billion company could be worth $50 billion, frankly, when this is finished.
Yeah, I mean, some of the parts when they first announced the breakup was $100 stock, still sticking by that. And then GE Healthcare, a little quizzical. They did miss on revenues, earnings beat by 2 cents, order growth up 3, which is an improvement from 1% last quarter. It's all driven by the United States. China was weak. Ex-China order growth would have been up 6. Yes,
but maybe
they did cut their guidance.
They de-risk China.
I think, right. So they cut their guidance because they're now saying don't expect any orders this year from stimulus. Remember, they have been saying they're getting hit by the anti-corruption, but they're also getting hurt because customers are delaying orders, waiting for that stimulus money. That's why we trimmed yesterday off concerns about China.
It was the right thing to do.
The stock was down 9% this morning.
I know. It was off 9%, and it's a big position. And I think the next level that we would probably trim some maybe 90.
Yeah.
What do you think? 88?
Yeah, 90. I mean, they did de-risk it. Mizuho calls it a clearing event.
To sell it.
Pharmaceutical diagnostics up 14%, seeing some uptake in Vizamyl used in Alzheimer's diagnostics, and a new CMS ruling that goes into effect at the start of 2025.
If they can get some Chinese orders, the stock will go to 100, but I don't know if they can. So it's not. I don't want
2025.
2025.
All right, let's do a quick rapid fire here, starting with Boeing. New CEO.
Kelly Orper, totally real serious guy, hands-on operator. I'll send the stock.